Hey guys, welcome back. In today's video, we are talking about the AMC squeeze, $1,000 per share, the biggest market crash, and many more in this video. First, we're taking a look at this. AMC is showing all the signs, and when AMC sets up like this, GME never moves alone. Before the first GME squeeze, Burry called out the manipulation. Roaring Kitty said the price action made 0 sense. The setup was obvious in hindsight. Now, those same patterns, suppressions, dark pool routing with volume are sitting on AMC. AMC leads equals GME follows. GME runs equals AMC isn't far behind. It happened before, the pressure is building again. So one of the things we've talked about all the time is how it doesn't matter which stock squeezes first because of the short sellers who are mutual in both. Meaning if AMC were to squeeze first, it would put pressure, it would margin call these short sellers, which would then force them to also cover their GME positions, and then GME will squeeze along with it. Vice versa, if GME were to squeeze first, it would do the same for AMC, and AMC will then squeeze with it. And so what we have always looked at is how when AMC runs up, you see GME runs up as well. When GME runs up, you then see AMC run up afterwards as well. So this is something that we're looking at again. But recently, there has been so many different individual things for both AMC and GME that we're applying pressure on the short sellers at the same time. Now, first we can take a look at the fundamentals. What we have, Zootopia 2 has opened to 556 million worldwide. The film has made cinema history as the 4th biggest global opening of all time. So if you wanted the sign of, is AMC going to do well for Q4? Well, this is what you're looking for. We have seen already so many movies for Q4 that has done extremely well. Zootopia 2 is the one that's doing exceptionally well as well right now, with of course still the upcoming of Avatar as well, which is something that I'm highly expecting. And so what we are looking at is how the box office is flourishing, and with that, you're going to see how AMC also benefits from that. We've already talked about the efficiency of AMC, meaning if we even get the same box office as last quarter as last year, we would make more money, if not the same money, with a less box office. But this time, not only are we looking at a bigger box office, but we're looking at an even more efficient AMC. And so this is why we said fundamentally AMC is going to improve, and that this is firstly already what's applying pressure to the short sellers, because we have seen how it's already attracted so many institutions, so many investments and capital inflows into AMC. Hence why we've been seeing the pressure being applied. Hence why you're seeing AMC consistently up. We were up 6.52% ending off of last week. But that is because of what people are realizing at times where volatility is an extreme fear, a market crash is an extreme fear, and AMC is that safe haven. You can even see if you want to take a look for the Friday, and that was already what the numbers were doing. Like we've said, we had Zootopia 2, Wicked for Good, and we're going to see many more as well. We already had some movies in the past like Tron that was doing very well as well. And so this is why we've said that this Q4 is going to be extremely big, and with this, AMC is also going to be big along with it. But then is looking at this fun fact: during the past 5 days, AMC has increased in steady increments by 18%, while Bitcoin has only increased by 6% during the same period. Moreover, the drop in Bitcoin market cap during the last couple of weeks corresponds to $1,120 per AMC share. So there's multiple key takeaways from this right now, which is when you look at it in terms of where are people putting their money in right now. We talked about AMC already, and this isn't just a sole comparison against Bitcoin, but it's understanding the capital inflows, it's understanding the institutional ownership, understanding the OBV. There are so many different factors that have shown us that more and more people are buying into AMC, and none of them are actually selling their shares. And this isn't a fact that's made up by me or any of the apes. These are facts that you can see when you do your research. These are facts that are given out by indicators, by data that has shown us this happening. We've shown the OBV, we've shown the institutional ownership, we've shown the inflow outflow of capital for AMC. And so from all of that, we realize that AMC is proving to be an extremely good investment. Hence why for the last 5 days, we saw it go up by 18%. And more importantly, the comparison we should be making is about understanding how AI stocks like Nvidia are dropping, and as we see collaterals being wiped away, we're seeing AMC go up. And that's a very important takeaway. One of the biggest takeaway that we focus on this channel is about understanding how collaterals affect AMC, and if we were to see collaterals fall, we're going to be seeing AMC go up. But then it's about understanding what does that mean, how would that price AMC? And you can see here, for Bitcoin market cap, the drop corresponds to $1,120 per share. And this is what we've done. Collaterals are being used from different instruments. Crypto is one of them. Mag 7 stocks, the tech stocks are one of them. The biggest focus, of course, with it being Nvidia. And then there are collaterals being borrowed from everywhere else, like we talked about the $2 trillion of liquidity from the reverse repo. These are some of the things that they have used in the past to short and suppress AMC and GME. And so you have to realize that, of course, if we are able to see this much money disappearing from these collaterals, remember, they will end up somewhere. There is a zero-sum game. And just as how they used it in the first place to short AMC, once this all becomes unstable, once everything gets evaporated, once everything crashes, you're going to be seeing how AMC will be showing $1,000, how they will be showing $10,000. Because the trillions of collaterals that were once in these stocks are now being transferred to AMC, being transferred to GME, and that's why these short sellers are afraid and why they're trying to prevent this. But there's more to this. Firstly, we talked about the 74.49% off exchange. And like we said, despite that, we saw AMC up 6.52%, and that was due to a drop in collaterals, which was showing how collateral is having something that has a massive impact on the price of AMC, and that if we were to see these stocks stagnate, decline, you're going to be seeing how AMC go up along with it. And it's why we've said is that institutions are viewing AMC as the safe haven as they worry about the AI bubble. But also, hedgers don't fear AMC because of the price. They fear AMC because of the truth that price has been hiding. You can manipulate a chart, but you can't manipulate the millions of retails we saw through the lies. So we've already known that this price right now, we know that it's suppressed, we know that it's manipulated, because constantly, an example of this is the fact we're seeing a 75% of exchange usage on AMC. But it's also realizing the fact that we're seeing constant spoofing. We've literally had market makers admit into that they set the price of what they think is fair, which when you understand them, is completely unfair. But so we know that this is happening. However, what we also know is how many synthetics have been created, or at least how big of an estimate of synthetics has been created, and what that will mean for AMC, what that means to the price, where all of these synthetics are forced to cover, especially with the fact that they are getting closer and closer to that stage. And so that's why hedge funds fear us, because they realize we know the truth. And then if you take a look at the bigger picture, is why we've said about how AMC can easily squeeze, why AMC can easily get to $1,000, it's because of everything that's happening right now. You have to understand what the bigger picture of that's going on. You have to understand the macroeconomics to understand how it affects interest rate, loans, causing it affects businesses, including Citadel and Virtue, AMC and GME. And so for those of you who don't understand, of course, I will always recommend you to do your own due diligence, do your own research. But this is what this channel is for. It's obviously understand also what is going on, to realize some of the news that you may have missed out on some of the perspectives that you may have missed out on. Now, when it comes to the macroeconomics, we've talked about multiple things so far. We talked about interest rate, what that does not only for AMC, but for everyone else as well. We talked about loans, but it's about understanding also that when you mix with everything that we've said in the past, not just this video, but the previous video, along with what Robert Kiyosaki has saying that the biggest market crash in history is coming, you start to see why it's important. Not only is it important for us, for me and you, but why it's also important for AMC as well. And why I've been highlighting this whole video. Firstly, about collaterals. Secondly, about a safe haven. Because when we do see this biggest crash in history, firstly, you have to understand these institutions want to protect themselves against the crash. They want to put their cash somewhere that will obviously minimize, if not actually profit during the crash. And this is what we've said in the past with how AMC is a safe haven because we talked about how theater industry is the biggest recession-proof industry, and with it AMC being the most undervalued, you can see how it's a safe haven. The second thing about the biggest crash is about understanding how that would obviously mean stocks like Nvidia, we're going to be seeing the crypto market, they are all going to decline. And just like we said earlier, we saw how AMC was doing this week, especially understanding the fact that it's because of collaterals failing. So if we were to see a big crash that crashes these big stocks, it would mean that there's a massive decline in collaterals. Then that will mean that there will be a massive incline, a massive increase for AMC. And so that's why it's important. Another factor, now I'm no genius, but it's quite genius how banks have over 300% credit exposure, yet still up and running. Now, we've already talked about the commercial real estate business. We talked about how we are seeing brokers already filing bankruptcy because of what's going on right now. But this is just to show you how big it is and why we said it's a worrying problem. Like we've said, this is part of the macroeconomics that whilst it's not directly related to AMC, but it's something that allows us to understand how firms are doing, how the economy is doing. Because if we were to see massive risk, if we were to see massive stress happening from these loans, from this exposure, then you're going to be seeing how banks are going to start to default, how banks are going to start to fail. And when banks start to fail, the institutions who borrowed money are also going to fail as well because they will not be able to borrow more money. And then on the other hand, you can see for the short sellers of AMC who said bankruptcy is inevitable, but apes who had put on the entire market, including US Treasuries and calls on gold and silver, we are the company now. Because whilst we've seen all of these guys always constantly calling out bankruptcy for AMC, which by the way, is something we have seen for the last 5 years. For the fact that there is a news article every single month saying that bankruptcy is going to happen for AMC for the last 5 years, yet we're still here, it really tells you a lot about the credibility of these articles, but also the strength of AMC. But then when you look at what's actually happening and you're seeing how banks have failed, you're seeing how companies like Credit Suisse has actually failed. You're seeing like the earlier what we talked about with how commercial real estate brokers have failed. And yet all of these companies failed, yet AMC is still here. From that, we should realize what is actually going on and why they've been screaming for the longest time possible for you to sell your AMC shares whilst all of these companies are going into bankruptcy. And because AMC infiltration is a powerful weapon the shorts have, but it only works if you let it. At one point, we had over 4 million AMC retail investors, a handful of full-time drama influencers defending and attacking that represent us. Also, you'll notice they're on X full-time. And so this is what I was saying with earlier. We constantly see articles about bankruptcy. You're going to be seeing it in my comment as well, people talking bad about AMC. Now, like I've said this before, and I'm going to be extremely transparent. If you watch up until this part of the video, congrats to you firstly. But I've always said this, AMC is not a perfect company. Yes, they have done very well, but they also have flaws. They always have improvements that they can make. Every time we look at the earnings, we talk about how AMC has shown they've improved, but then obviously they could do better. But the things that you have to be able to differentiate between a non-biased view and the fact that you can look from both a pro and a con perspective, so the good and bad perspective, but there's a big difference with these guys who capture one small minor mistake AMC has and enlarges it and tackles it and use it as the reasoning for why AMC is a bad company, for why AMC is going to be bankrupt. And we've shown plenty of examples for this. For example, people will talk about the debt problems of AMC, which yes, AMC does have a debt problem, but what they then fail to say is how AMC, firstly, their interest rate affecting the interest payment from these debt. Secondly, how AMC is paying off these debts, how AMC is restructuring these debts. And you can see how all of these things are ignored by these haters and they just talk about these debt problem. What they also fail to realize is that the countless companies that are out there also have debt. We've seen this with Virtue. We know that even Cinemark has debt. And so a debt is a very normal thing. And now this is something that they have to differentiate. And when you look at the difference between Virtue and AMC, you will see that AMC's debt is gradually decreasing, whereas Virtue's debt is gradually increasing. And so if there is a big factor, then the ones that should be worrying is Virtue and not AMC. Yet these guys fail to say this, and that's because they are trying to make apes turn on one another. We've said, there isn't a problem if there's a bad thing about AMC. There's no company can be perfect, and there's no problem in pointing it out. Because that's the whole point. We want AMC to improve by fixing these problems. But there is a big difference from pointing out this problem, continuously talking about it, and say how it is the doom of a company. And that's why I think it's the difference between pointing out a mistake and enlarging a mistake. And now you can look at this as well. The point for AMC GME, I think Michael Burry is correct. They are effing with their accounting to make them look profitable. So this is the whole talk about the AI stocks in the market right now. What we essentially are looking at is how the AI bubble is obviously getting extremely big, and it feels like it's done artificially on inflated numbers, on imaginary stuff, whether it's orders, whether it's, these revenues, and that it's getting too big, and when it gets caught, it's all going to come crashing down. Is why you see Michael Burry constantly talk about this. And the reason why it's important is because at the forefront will be companies like Nvidia. And this is why they're trying to prevent the margin calls. Because they realize that if this is true, if Nvidia is going to be the biggest bubble, and we could potentially see $2, $3, $4 trillion get wiped out, you're going to see how that's a massive problem. If you take a look at this, for the record, US stocks peaked in October 2007, and the economy entered recession in December 2007. As of now, the S&P 500 peaked in October. And then if you take a look at, is the AI super bubble killing jobs? It's not creating jobs, that much we know. And so this is what people are worrying about. And, again, I can't tell you for certain whether or not the market will crash within, a week or two. But what we are looking at is how some stocks are too overly inflated in terms of value, and that it will come to a time of correction. And when it does correct, the problem is how much will it correct? 30%, 40%, 50, 60, 70%? Because the bigger it gets, the bigger crash it will have, the bigger effect it will have on the market. And then you look at it from across the world into Japan. You can also see here, because hedge funds borrow and use the yen rather than the US dollar, because Japan interest rates are 0% to borrow Japanese yen. They use that 0% interest money to buy US AI stocks. And so the reason why we continue to talk about AI stocks is that not only is there a problem with the potential bookkeeping of AI stocks, so whether it's artificial orders, artificial revenues, but it's the fact that the money that was invested into these stocks are borrowed from the Japanese yen at 0% interest rate. But we talked about the Japanese yen carry trade, and we talked about how that could then easily have an effect on the market as well. So there are different factors, completely unrelated, yet it affects the same industry that is the most valued industry right now, that can easily crash the market. And so when you want to look for indications of what can crash the market, this is what we are looking at. And now, on the other hand, when you take a look at the charts for AMC for GME, first you can look at this for GME. Last week, when I first posted, their market was in extreme fear, or while everyone was calling for lower lows and no sign of a turnaround. Things have changed so fast, and the algo seems to be telling the truth. We're obviously looking at GME on the counter side, on the increasing side. And then if you take a look at AMC, we're also seeing how AMC is showing very bullish movements. Now, we've already said this. We know that AMC and GME charts are being manipulated, are being suppressed. And so the technical analysis should not be the 100% guarantee here. However, we only ever use technical analysis when we have fundamental factors to back it up. We don't just look at AMC, as a technical factor on its own. We look at it only when we realize there are big fundamentals. And everything we talked about in this video is the big fundamentals that are showcasing how these stocks will crash, allowing AMC to go up. And then if you want even more confidence, we see Michael Burry say that he has a plan that GameStop should implement now. And so it may be that even Michael Burry wants GME to squeeze, and he's really trying to get involved because he was the one that has been recently extremely vocal on shorting AI stocks. Some of the biggest positions he took are the puts on Palantir and Nvidia. Now, we've already talked about how Nvidia is used as collaterals for AMC and GME as well. And so the fact he's talking about GME right now and then the fact he's shorting Nvidia, and you see the correlation between these two, you start to expect that is he wanting a GME squeeze because he wants to get in as well. And he even liked this comment of time to open a GME position, brother. So we really could be looking at Michael Burry forcing a short squeeze. And the reason why this is a big thing, firstly, it goes back to what we've said at the start. If GME were to run first, AMC isn't far behind. So it doesn't matter if GME was the first one to squeeze, because AMC will squeeze with it. But it's about how for the Volkswagen squeeze, the reason why we saw it squeeze was because the institution against institution. Now, yes, Michael Burry has closed down his fund, but it doesn't take away from the power that he once had. It doesn't take away from the fact he still is that guy. And so what we could be looking at is that Volkswagen situation again. But then it's also, look, JPM moved its entire gold trading desk to Singapore immediately and by the end of this week. And so we're also looking at big movements in this. Now, firstly, something massive could be happening for gold. And if it does, you're going to be expecting HYMC to do extremely well, aka AMC making a big return on their investment. Secondly, every time when we've seen the gold market get extremely high, when we see more and more capital go into gold market, that's because they're inevitably waiting for the market to crash and they will parking it in gold. So what we could be looking at is something we talked about this whole video. As always, this is F Financial Advisor. Do take a while to take care of yourself. Make sure to do your own due diligence and research, and make sure you check out the last video to understand everything that's going on. As always, I'll see you guys next time.